SOFI Technologies has had a big run over the past year. SOFI is an online banking and financial services company, and from last summer of 2024 up until the beginning of 2025, the stock price was up around 300%. Since it's come down substantially with this market correction we've been going through. So is it a good deal? Is it a buy right now? We're going to go over all that. I'm also going to give my 5-year out price prediction for SOFI Technologies and whether or not I might be an investor over the next weeks to months. Welcome to the channel, y'all. My name is Trey. This is Investing by Numbers. We talk all things stock market and investing. I go over my own portfolio and clue y'all in on what stocks I'm buying every month. So if you're into that kind of thing, subscribe. Hit that subscribe button and like the video. It really helps out, especially small channels like us. So as you can see here on Robinhood, earlier, this is what I was talking about from last summer, this run from, around just over $6 a share up to almost 18, almost a 300% move. And recently we've gone from 18 down to about 12. So roughly, somewhere around 30-35% decline in this correction we're in. So is this a good buying opportunity for SOFI? We're going to check it out. Right now, SOFI is trading at around a 31 PE. Yeah, just under. So let's check out the numbers here on SOFI and just check everything out, see if it's something that we are liking the fundamentals on. So let's check out revenue. Revenue quarterly looks good. We've had steady revenue growth over the past couple years. Also, let's check out net income. We've had good, steady net income growth as well. Obviously, down here, SOFI has been heavily investing in marketing and other avenues of really trying to push themselves as a disruptor for this sector, in banking. Obviously, with other banking companies, they have a lot of brick and mortar stores, and SOFI is going to be a little different. They're mostly online based. So this is kind of gives us the opportunity for SOFI to better net margins, maybe more efficient industry or company here as far as fintech goes. But obviously we've got we're seeing great net income growth with SOFI. Let's check out the balance sheet. Now, historically, banking companies' balance sheets aren't, as good as other companies that sell products. Generally, their assets are just a little over liabilities, and their cash on hand usually is at most would cover, probably 20 or 30% of their total liabilities. So generally, they're not as strong balance sheets as other companies. So take that into consideration when investing in the banking companies. Generally, I don't invest much in banking companies for this reason. Even great banking companies have shut down, over the years, especially in the great financial crisis. And we saw a few shut down back in 2022. So, in my opinion, they carry a little more risk. But anyways, we've got $36 billion in total assets to just under $30 billion in total liabilities. With most companies I invest in, I like to see 50% or more. Obviously, that's not quite there. And cash on hand is $2.8 billion, so very small amount in reference to total liabilities. Which is also, normally I like to see cash on hand cover, as much as possible of liabilities with other companies. But I don't know if you know of any banking companies that have more cash on hand than they have total liabilities, comment below. I'd bet that there's not many out there. And if they are, they're not major banks, just the way, the industry operates. So let's look at income statement. We can see, actual percentage growth over the past few years. Obviously, revenue 2019, $721 million, small gain into 2020. But then we had around a 35% move or so into 2021, and somewhere around a 70% move into 2022, and then a good over 50% move into 2023, and another 20% or so, maybe 25% move into 2024. So we're seeing consistent, great revenue growth. Net income, obviously, we just became profitable, within the last year to 2 years. And obviously, SoFi's been spending a lot of money on advertising and acquisitions, stuff like that. So they're just starting to break into profitability. But we had a huge jump from 2023 into 2024. Obviously, negative 341 million in 2023, and we are up 479 million in 2024. So great numbers there. And normally I want to look at PE ratio, and with SoFi, of course, we're not going to have a lot to work with here as we just became profitable, in the past couple years. So, and generally, when you first get into profitability, your PE ratio skyrockets and then it plateaus out. So, like I said, right now we're sitting around a 31, and that reflects here on macro trends. Generally, a lot of the banking sector, a lot of the other companies, they trade fairly cheap. They are, usually around 10 to 20 PEs. Now, the big question for SoFi is, of course, we've got a lot of growth going on right now, so that's worth more PE. But we also are a largely online-based company, so our net income and our net margins, should be better than traditional banking sector. So, maybe long term, SoFi, might trade, 15 to 25 or maybe 20 to 30 PE range. History is yet to tell, and what will happen with SoFi. So I've got, some numbers I can look at here with I can give my own prediction for the next 5 years of what SoFi might do. Obviously, we have a lot of room to grow with net income and revenue, but over time, that stuff should plateau out. But the big question is, how long is it going to take for these numbers to find their range? And I think, we've still got, a good 5 to 10 years of steady growth in SoFi. So let's look over some other numbers here with net income, earnings per share, and our PE ratio, and see maybe what SoFi might do price-wise over the next few years. So let's do an outlook on SoFi in 5 years. We're going to kind of analyze what other banking companies do, their net margins, and roughly about what kind of numbers SoFi might put up over the next 5 years, and also kind of a PE ratio range of where it should trade. Obviously, it's traded pretty expensive right now, around a 30. Other banking companies, the PE ratios, they trade, anywhere from 15 to maybe 25, but probably closer around 15 to 20 PE. But SoFi, being a more online-based company, I don't see a 25 being unrealistic, especially in that it's got a lot of growth going on over the next few years. So let's say revenue right now, the last year we had was around around 30% revenue growth this past year. So let's say over the next 2 years, we get about 20% revenue growth per year. And then let's say the 3 years after that, we get 15% a year as it starts slowing down. That would get us to right at 8.25 billion. All right. So I'm just going to write up here 825. We'll put commas. That's million. All right. So we'll have a revenue of about 8.2 billion, 8.25. Net income is the next thing we need to look at. So I kind of want to use a net margin here. So a lot of the banking companies, they fluctuate anywhere from a 15 to 30% net margin. And that fluctuates depending on the environment, economic environment. So let's just say, and let's say that being that SoFi is an online-based company, we're going to have a better PE ratio, and we're going to have better margins in that we have less brick and mortar going on. So we'll say net income will increase. Let's say we can make it to that 25% margin. So a 25% net margin would put us right around just over 2 billion. So I have the number written down right over here, 2 billion.061. All right, so that would put us right around a 25% net margin for that 8.25 billion in revenue, and that's about a 330% increase in net income over the next 5 years. Right now, our net income is right at 479 million, and getting up just over 2 billion is a 330% jump there, which is not crazy over the next 5 years, as we're going to see a lot of net income growth. So I see us getting to around a 25% net margin with SoFi over the next 5 years, realistic. So now the question is getting to earnings per share so that we can value that with a 25 PE and see what the price might be. So if we have a net income of just over 2 billion. We have 1.1 billion of shares outstanding. That brings us to an earnings per share of $1.87 per share. So our PE ratio, our PE ratio is going to be stock price divided by earnings per share. That equals our PE ratio. So if we plug in, we know what our earnings per share is going to be. So let's take it from 187. Let's play it safe and let's drop to 170. We're going to give ourselves some wiggle room there. We're going to lower it from 187 to 170, and we're looking for a 25 PE. So we don't know what the stock price is going to be. That's what we're looking for. So instead of dividing by $1.70, we're going to multiply 170 times 25, and that's going to give us around a $42.50 price per share. So being that we're sitting at around $12 a share right now, where's my notepad? There we go. So we're looking at almost a 400% increase over the next 5 years outlook. Now, even if we miss that and hit around a 30 to a 35, that's still fantastic returns over the next 5 years. So I like this number. The only thing I'm not a big fan of when it comes to SoFi is it's in the banking sector and the balance sheet. And for me, banking companies carry on a little more risk. So I would say for me, instead of going all in on something like SoFi, I would keep it to 5% or less of my portfolio. And looking at these numbers, it makes me really want to add it to the list. I'm going to have to think about that over the next few days. But, even being that if we miss and come up around a 35, that's still 300% over the next 5 years, which is a fantastic return. So I would say, anything right now under $15 a share for SoFi. Maybe if you want to play it safe, you could go to 13 or something. Because I don't think $40 to $45 a share in 5 years is crazy. I think that's pretty realistic, and we'll just have to see what happens over the next few years with SoFi. Anyways, that's it for me, guys. SoFi, looks good over the next few years. Obviously, they've got a lot of growth ahead of them. They're doing pretty well. Their stock price is down considerably over the last few weeks, like a lot of other companies out there. But comment below, what do you think? Are you buying SoFi? I might be. We'll see. I'll have to make a decision there. As I said earlier, the banking sector is a little risky, in my opinion, even with some of the companies that have been around forever. But obviously, with doing price predictions on stocks, a lot of people do it a lot of different ways. I kind of like to do the revenue, net income, PE range type kind of a thing, which can be a little complicated. But with practice, you can be doing this too if you aren't already. But anyways, if you enjoyed the content, please like and subscribe, and I will catch you on the next video.